Hi, pastors and ministry leaders. My name is Christine, one of the church specialists here at StartCHURCH. In this video, we will be discussing retirement plans for clergy. There are many pastors who do not have a retirement plan in place. Most churches only pay the operational expenses, which may include a salary for the pastor and ministerial staff. But how many churches actually build a retirement plan into those compensation packages? Here are 5 steps to creating a successful retirement plan. Step number 1, create a compensation agreement. A compensation agreement is a contract between the pastor and the church. A retirement plan is created within this contract and must be signed before any other items can go into effect. The first essential item is to consider whether or not your pastor has a compensation agreement as of today. If you answered no, don't worry. You can call us at StartCHURCH at 844-304-5824, and our specialists can help create one for your pastor. If you answered yes, congratulations, you can check one item off your list. Step number 2, calculate the retirement fund annual and end goal. Retirement income is not taxed until it is actually in a bank account and ready for use. So, how do you calculate the amount of money someone needs for retirement? The short answer is you really can't know how much someone will need for retirement. The good news, however, is you can make a prediction. Now, inflation does play a role in determining a retirement plan, but at least at this point, you have figured out a baseline goal for what your pastor needs annually. If you want to know how to determine the best retirement plan for yourself, please seek a financial expert's advice. Step number 3, self-employment tax exemption and housing allowance. If a pastor's salary is $100,000 per year, the self-employment taxes paid on that income are $15,300, which is 15.3%. Would you rather pay the IRS that money or pay your pastor and show honor by putting it away for the safekeeping and a retirement fund? Here's an example. If someone contributed $3,000 per year for 20 years at a 9% interest rate, that individual could have saved over $167,000 in tax-deductible contributions and tax-deferred earnings. If that same individual had saved for 30 years, this amount accrued would be over $445,000. In 40 years, they would have saved over $1.1 million. Remember, it's never too late to start saving and planning for your future. The second biggest money saver is approving a housing allowance for your pastor. I like to call this self-employment's tax exemption and the housing allowance the dynamic duo. Together, they can make a pastor go from one of the highest taxed individuals to one of the least taxed individuals. Step number 4, assess current investments. Many pastors in the 21st century are bivocational with the goal of eventually solely operating in ministry full-time. These bivocational pastors may be employed by companies that offer 401k plans or pension plans. It is essential to assess your pastor's plans to properly evaluate their portfolio moving forward. In short, you want to know what shoes are in your closet so you don't rebuy the same pair. The key to a successful retirement plan is variety. Step number 5, execute the plan. It is an excellent idea to start a retirement plan for your pastor when first planting a church. After all, it is honoring to show the church plans to provide financial security to your pastor and their family. If you have questions about a compensation agreement or minister housing allowance, please give us a call at 844-304-5824. It would be our honor to serve you.